to another angle, which is the investor's point of view. We know that one of the strongest forces that is reshaping the world towards sustainability is capital markets and how investments are allocated towards more and more sustainable companies. Now, let's hear a very important voice in the investment space, which is Gilles Guibault, who's head of the European Equity Strategy at AXA, which is connected. Hello and welcome, Gilles.
Hello. Hello, thank you.
Oh, it's a pleasure having you because, you know, sustainability matters more and more also in your investment decision. First, can you tell us how the idea of sustainability is changing, you know, since you started looking at companies from also this perspective?
Sure. Being part of an insurance company, we are by definition long-term shareholder. And to some extent, if you are a long-term shareholder, not only because you want to ensure that your behavior doesn't have negative externalities, you have to look at after all sustainability criteria, just because they are consubstantial to your investment, because it's a way to assess long-term risks. So even before we were pushed into, let's say, more formally liability-driven funds or investment, we have always looked at ESG criteria, because for us, it was really a risk assessment and a financial duty to our clients to ensure that we were reducing the risk we were taking in our investment.
Yeah, absolutely. But can you tell us more on your investment process? So what kind of measurement do you start from when you look at sustainability from a quantitative point of view, and then also how the dialogue with the management of companies makes the difference in your work?
So, being a large investor, we need to deal with huge numbers, so a quantity of companies. So for sure, to start with, we need quantitative, because to deal with such high numbers, thousands of companies, the entry point can be only quantitative. But then, when we start to dig into numbers, quite quickly we need to look at qualitative and to engage with company. And this is the beauty of being also a long-term shareholders, because we are, across the year, we are able to build relationship with company and to improve the dialogue we are having with company, and it becomes really a bilateral relationship where we better understand the company, and we are, to some extent, we are in a better position to assess the overall risks that a company could face, from governance to social to environment. Depending on companies, obviously, we will put the emphasis on one or the other of those pillars. But for us, at the end, sustainability is just to ensure that we have an alignment of interest with the company.
Absolutely. And as you know, European came out with a taxonomy, which is kind of a first step to help you and all the investors to decide what is sustainable, what is not sustainable. But there's still a large discussion, you know, and especially inside the ESG investment space. So how do you feel about this? And how confident are you that the existing rules and methods are really a way to get to sustainable investing?
As often when you have to deal with such, let's say, change in regulation, you have to adapt. It means that at some point, taxonomy, it's a good thing, because right now there is no one single methodology to understand what is or what is not sustainable. So having some more commonality within that space, it's important. It's also a way to foster companies and to enhance companies to communicate more, because at the end, it starts with communication. So taxonomy is important to ensure that companies are providing some numbers and some KPI to also facilitate the job we are doing. So of course, it's not perfect from day one, but at some point, we have also to acknowledge that we have to be pragmatic. And for us, it's just a new journey which is starting, and I think it will be just for the better.
Yeah, we know that existing scoring and rating methods are not enough. There's also the engagement of investors versus companies. How active are you, and how relevant is it to you, the engagement you have with the management of companies?
For us, it's maybe the most important part, because it's really when we are able to understand if those topics are faced seriously, and we can see a clear difference between companies that are just doing the exercise for the beauty of the exercise, and the ones that are really able to listen and to evolve their position. So the dialogue is really important, and for all those companies where we have, let's say, a decent stake, decent position, we have a clear policy of engagement, and we have a regular dialogue before AGM to discuss the main topics we are not comfortable with.
Now, Gilles, you do have a long experience in investing. What's your sense? Are companies improving in walking the talk they're doing, in keeping the promises they're making to the market in terms of putting a real sustainability at the center?
But for us, it's important because on top of having, let's say, a social importance, what we have, let's say, discovered, it's often companies that are walking the talk and that are more, let's say, more efficient or more advanced in sustainability are often those who have also the best returns. Because when you think, what is it about? Not maybe on a one-year basis, but across a cycle, it's about better usage of resources, being people or natural resources. So often those companies that are ahead of the curve in terms of sustainability are often those who are the most profitable. So maybe we start thinking that we were kind with the society, but from a, let's say, financial standpoint, it's also a big positive, because you get a reward for this kindness, if I may say.
That makes a real difference, because the correlation between sustainability and performance can make a difference on the market. You started saying you are a long-time investors, and but at the same time, you know, we are market reporter here in the studio. We tell what the market does day in, day out, and we see that also market react on short-term results. How do you match, you know, long-time perspective with short-time results of companies?
So here, depending on fund objective, but just to have an indication. So we ask for transparency to companies. We need to be transparent. But on average, our turnover in our funds is between 20 and 30%. What does it imply? It means that on average, when we take a position in a company, we keep it for 3 to 5 years. So this is the part we are, and so it means that also it implies that there is a part of our portfolio which is maybe there to, let's say, to adapt to the market moments or to the macro scenario. But overall, we have this approach where when we buy a company, it's really for the next 3 to 5 years. We are not traders, and this is a big difference, where when you take a position and maybe for, let's say, a couple of days or to have some momentum, where maybe you can not taking care on ESG stuff, it would be maybe the exact opposite. While if you want to be a long-term shareholder, you have to look at those criteria.
Well, that was very interesting, Gilles. Thank you for that. But lastly, you know, these are very turbulent times in terms of geopolitics. We are under shock, but also in terms of market volatility due to inflation, interest rates, slowdown in economic growth. Do you think that sustainable investing will take a hit from the current market conditions and economic conditions, or it will be reinforced by these kind of fundamentals?
Short-term basis, because there has been a lot of flows coming to the, let's say, to the ESG space, and this has been that has become much more, let's say, Main Street. Maybe you could argue that short-term, if markets are more turbulent, we could face some outflows. So maybe there could be some more volatility on the higherly rated names, but it doesn't change the long-term picture. Often, those are able to, let's say, better preserve and better to have a better usage of resources, better usage of people, can sustain higher growth, can sustain higher profitability, and those are the main criteria and the main driver for long-term performance. While on a short-term performance, main driver is about multiple expansion or multiple contraction. So maybe on a shorter term, we could, let's say, be worried about maybe ESG investment, but doesn't change the picture over the medium term.
Mm-hmm. That's very good to know in these turbulent times. Thanks again, Gilles Guibault, Head of European Equity Strategies at AXA. It was a pleasure having you at our Sustainability Day.
It was my pleasure. Thank you. Bye-bye.